a quantum machine could break Bitcoin and Ethereum's encryption before the next US election, 2028.
Another threat to Bitcoin, the debt risk.
You can imagine the debt multiples would go up through the roof over time, and that could create a leverage cascade risk like we've seen in 2022.
In terms of where you think, in terms of cycle top, do you think that means we could still hit all-time highs this year again, go above that?
Yeah, great question. So I do think the cycle is dead.
If quantum isn't solved this year, do you think that gold will continue outperforming Bitcoin?
That's a tough one. I don't know if I can answer that one.
You've got either Bitcoin, gold, silver, or Nvidia.
That's a tough one. Like, they're all pretty good assets in different respects. I would definitely choose.
GM everyone, and welcome back to another episode of the Coin Bureau podcast. Now, today our guest is Charles Edwards. He is the founder of Capriole Investments, which is a systemic macro absolute return fund. And he's also a well-known macro analyst who has developed numerous proprietary Bitcoin models. So, Charles, a very warm welcome to the Coin Bureau.
It's great to be here with you. Thanks, Nick.
Pleasure having you, man. So guys, before we kick off, just a few quick disclaimers. Nothing in this video is financial or investment advice. Please consult the disclaimer in the description for more information, or consult your investment advisor before making investment decisions. So Charles, you're joining us right now on the day after Trump called off his short-lived Greenland tariffs.
Yeah, true.
And for 3 days of consternation and pandemonium, which actually saw Bitcoin drop below key levels, which you mentioned earlier this year, I think 93,500. And in fact, there was a time last night where Bitcoin was actually trading below the yearly open. So let's just start right now with what's going on in the short term, the here and the now, and open question. What is going on?
Yeah, I mean, it's good we had this recording today instead of yesterday, because so much has changed in the last 24 hours. I think especially the Greenland stuff was pretty concerning, gave the markets a lot of jitters. So lately, Bitcoin is trading like risk on asset, like equities, not like gold, unfortunately, but the hard money store of value protective vehicle that we want it to be is not quite playing out across the markets. But yeah, I think the tariffs is a big deal. You know, me personally, I could get across the concept that the US should be able to have tariffs last year. I think within reason that they make sense to protect their economy and that sort of thing. Broadly, the impact of tariffs hasn't been as negative as people think. The economy is up, inflation is down. A lot of people thought that tariffs would create inflation. That hasn't happened so far. So that's great. But when you start rolling out tariffs to basically conquer other countries, as was being threatened over Greenland, I think no one is going to fall for that, or everyone's going to fight it, basically. So that obviously had repercussions around the world. The thought of breakup with NATO and EU and all that sort of stuff obviously caused markets to pull back and risk manage. So that's kind of made sense. And fortunately, Trump's wound that back just in the last 12, 24 hours, saying that they're negotiating a framework with Greenland. It sounds like there may be some deal around Golden Dome being built there as well and having access to natural resources there. So, you know, at the end of the day, if it was all just a negotiation tactic, as Trump often does, he kind of pushes things, exaggerates them, and then winds them back and uses a negotiation tool. If that was it, and if that deal he's proposing actually closes, I mean, that's an amazing outcome from the US perspective to have access to Greenland's resources. Who knows where it will land? Obviously, it could all flare up again, but it's definitely positive progress, I think, and good to hear with less chances of global meltdown on that front.
Yeah, I mean, you say that it seems like things are calmed down now, at least for the next few days. You never know. Knowing Trump, probably come on the weekend, Friday evening, US close, another tweet comes out.
True. Yeah. But I think, you know, if you compare it a bit to April when he first rolled out all his tariffs around the world, and they were like ridiculous, like over 100% in many cases, huge shock within a few days or a week or so, you know, 80% of that was wound back and nothing really stepped back up since. So I think pending if Greenland is really on board with some sort of deal that is mutually beneficial in some format, then I'm optimistic. This is actually really good, but let's see if sanity prevails.
Let's see, indeed. So we'll get back onto Bitcoin and your thoughts about Bitcoin this year. But I just quickly want to roll back to last year, because that informs a lot of what's happening right now and generally the sentiment and where assets are positioned. I think it's clear that last year everyone had such sky-high aspirations for crypto and Bitcoin, where it was going, regulations, the liquidity, the pro-crypto president, etc. We actually, Bitcoin ended the year, I think, slightly down, and was outperformed by most other asset classes. I'm just curious, what do you think was the main precipitating factors in terms of why Bitcoin had such a lackluster year last year compared to so many other assets?
Yeah, I mean, I also came into early last year pretty optimistic with the political background, the massive change in regime that's supportive of crypto, the many laws and regulations, the Genius Act, everything that kind of happened, the Bitcoin treasury, all that sort of stuff in the US government levels. So I was optimistic, but then as the year continued on, especially Q2 and definitely Q3, I was getting really concerned about a few things. Firstly was that usually in the last 5 years, and I've basically tweeted this every time it happens, whenever gold has a measurable rally, within 2 to 3 months, latest 4 or 5, Bitcoin will follow pretty aggressively, which makes sense. Capital flows downstream. It's basically the same trade. It's hard money. It's a risk-off asset. It's a protection against inflation, what have you. So similar trade. And that just didn't happen at all last year. And that's the first year that hasn't happened since I've been tracking that kind of metric in the last 5 years. So that was a pretty big red flag. Secondly, there was just no reason for it not to happen, because all the metrics you'd expect to be supportive of Bitcoin were there. All the political landscape, regulatory landscape was all there. All the on-ramps from banks to crypto exchanges all were back online. So what was going on? You had money supply. It actually grew over 10% last year, 11 trillion added to global money supply. So it's now at 115 trillion, which is the highest growth rate and growth of money supply since mid-2020 peak Corona. So huge stimulus we had back then was comparable last year. And gold went up 11 trillion. So basically 1 for that amount. Bitcoin net down. Equities went up, double digits as well. So everything was kind of going up and playing that liquidity risk on trade except Bitcoin. So what is the reason for that? And for me, there's only really one reason, and it's because I've been tracking this industry for several years. It's quantum computing threat. So essentially in 2025, roughly around mid-2025, we entered what I call kind of the quantum event risk horizon, which is basically the time it takes for a non-zero threat from a quantum machine to break Bitcoin's existing cryptography, which is about 2 to 3 years now for non-zero probability, is less than the amount of time it will take to upgrade Bitcoin and roll that out across all active addresses. So that's the first time in history that's ever happened, which means pre-2025, you more or less didn't have to worry about quantum risk because we could upgrade it and beat that time frame. We still could upgrade it and beat that time frame. It's just that there's a non-zero probability now that a quantum machine will be powerful enough to break it within that same time frame. And that's about ballpark 20 to 30% that quantum machine by 2028, so 3 years, 2.5 years now, will be able to break Bitcoin's existing cryptography. So still on the whole, a low probability. That means by definition that most likely it won't happen, but it's still there and it grows every day. So that's a risk that just doesn't exist across these other asset classes because gold, equities, all your banks, your brokers, they all have 2FA. So they're quantum resistant by definition. Many of them are also upgrading their encryption layers for passwords and that sort of thing to quantum resistant as well. So, and they're centralized, they can roll back and protect investors. So Bitcoin is the number one threat to quantum, and it's now in that kind of window of risk. I'm optimistic we'll solve on it, and that a lot of that risk is actually priced in already today. So there's actually some positives to that we can talk about. But I'm pretty sure, and I'm basically confident that is the primary reason for the underperformance. You'll also notice that the underperformance started in October, which just happened to be when I was talking about it publicly, but it's continued aggressively from that point, which is basically when we entered, give or take, that 2 to 3 year horizon. So we've got a few things to fix on Bitcoin.
So definitely we'll chat on about the quantum threat because it's a big topic and I think it's worth covering for sure. I just want to circle back to the exact point because you said around October and that quantum became a real threat at least. Obviously, I think many people, if they point to in terms of what drove at least the precipitous crash in Bitcoin post all-time high was the 1010 crash. Do you not think that that was the most, direct example of what caused the price to crash recently, and that subsequent underperformance, albeit there may have been these underlying concerns around quantum?
I basically think 1010 is irrelevant. We've had hundreds of events like that in the last 4 or 5 years. Obviously, this was a very big one. On net, Bitcoin was down, I think, in that week about 15%. There's nothing compared to what we've seen before. Liquidation cascades are regular. They happen a lot. And at the end of the day, the driving fundamentals of this cycle have been institutional buying and flows into ETFs and treasury companies. So I can briefly pull up a chart of that. We flipped to institutions net selling around 110K, and the rate of buying was dropping obviously into that period of time. I think a lot of things correlate to that peak in October. The buying peaked in October, just before actually 1010, and obviously continued after that. It went to net selling at 110K. So that's when this was one of the metrics we look at. Obviously, that's when we de-risked pretty significantly in Bitcoin. It's now actually really optimistically flipped to net buying. So for those who don't know, this indicator on the bottom here, when it's green, it basically means there's net buying of institutions or inflows into ETFs and treasury companies, the 200 treasury companies, netted off against the daily mined Bitcoin from miners. So a positive demand pressure in the market. And so today, there's institutions are buying 200% of the daily mined Bitcoin. So that's really great. So that's good to see. But, also around the mid-years when a few things happened. So BlackRock added a quantum disclaimer to their ETFs and said that it was a risk. We also had a few headline events in this sort of Q2, Q3 period. The Department of War, so the biggest, obviously Department of Defense, Department of the US, said that there was a risk of Q-Day effectively within the next 3 years. Then coming into Q3 in this sort of range here, you had Vitalik Buterin, obviously massively influential person in crypto, saying that a quantum machine could break Bitcoin and Ethereum's encryption before the next US election, 2028. So this risk became very prominent in this period. And I believe that's the primary factor that we've underperformed gold and all other comparable assets through this period. But fortunately, there's positive signs now, like net growth. I think most of that risk is priced into Bitcoin. So for example, if you just very briefly look at the energy value of Bitcoin. So this is kind of a fair value metric for Bitcoin that I like. That's tracked Bitcoin very well for the last decade. We're trading here about 30% under the fair value of Bitcoin today. That's based on the energy committed by Bitcoin miners. So if you assume a 15 to 20% chance that the value of Bitcoin should be discounted because it's quantum threat that we just talked about, you can skew that number how you like. We're still undervalued quite heavily, and especially a couple of weeks ago, it was almost 45, 50%. So a lot of that risk, I would say, has already been priced in. What matters now is how we address it going forward. But today, relatively, there's a good value opportunity, I think.
Okay, fair point. Yeah, it's interesting because I would definitely say, having followed many commentators and the narrative, it is basically not according to the consensus view that most people seem to just blame it on 1010 mass liquidations, massive sized in terms of liquidations, market makers going under and then just not bidding anymore. But it is interesting. So then just going back to this now, I mean, obviously that the data seems to correlate in terms of what you're talking about, the potential of the quantum threat. But in your conversations, because I assume you have conversations with these asset allocators, do they, and we obviously, for more recently, for example, we had Bernstein, I believe, that came out that basically said they're going to suggest under allocating to Bitcoin based on the threats of quantum, or at least reducing the allocation size. But in terms of your conversations with a lot of other asset allocators, do you think that this is a threat that they elucidate to you in terms of concerns for them?
I mean, yeah. So like, a great point. We haven't even talked about institutional allocators like Van Eck, CEO. They obviously heavily involved now in Bitcoin. Basically said, I can't remember the exact month. I believe it was October or November last year. So similar time frame we're talking about. He said, we've been around for a long time, whatever it is, 100 years. And, we'll continue to be around after Bitcoin's gone, and we'll basically reassess our positions in it if required based on rising quantum threat. So it's definitely been talked about at these circles. If you talk to people, especially in private, that have been in the space for 5+ years, they talk about it. They talk about it capping the upside for Bitcoin until it's addressed, because we have significant issues there to look at, which just doesn't exist with assets like gold. And so I think that's why we've seen that basically capital rotation in the last 12 months. You can see the OGs and long-term holders decrease their positions massively in Bitcoin last year. And that's, investors have been around 2+ years and 7+ years, all kind of cohorts you cut across, sold a lot last year, multiples of what they did in prior cycles. So it's not just kind of like a normal cyclical behavior, if you will.
That's a good point you raised there, because I think one of the many factors that many people point to, especially the on-chain analysts, in terms of what the actual markets, what caused the price to, albeit the reasons for them selling, you point to quantum, it could be many things, could be that they've held for so many years, but it's because of this massive wall of long-term supply coming to the market. And despite the amount of institutions, some buying that may come in from ETFs and everything, this wall of sell pressure was just too great to basically for the demand to meet it at that particular point. So I'm curious then, in terms of what happened last year specifically, because you're obviously in the weeds of this, that a particular, you mentioned the Department of War, obviously they came out, they said their Q-Day. First of all, for our audience, can you just define exactly what Q-Day is specifically?
Yeah, so they didn't use the word Q-Day, but they basically said similar words, a quantum-capable machine in that time frame. But Q-Day is basically the day, in a theoretical day in the future, when a quantum machine will be able to break traditional encryption, which is usually defined as RSA, which is like the classic encryption that banks and other infrastructure have used in the past. For Bitcoin, Q-Day for Bitcoin is actually a bit earlier, because Bitcoin uses elliptic curve cryptography, ECC, which is actually weaker than RSA. So it probably breaks years in advance of RSA. There's been a lot of modeling around this and when and what's required to do it. Some papers, for example, that have found that you need about 2,300 logical qubits to break Bitcoin's encryption. And most of the kind of tier one, so there's about 5 or 6 quantum firms globally, are projecting multi-thousand logical qubit capability in the next 4 to 5 years. So, somewhere between the 4 to 6 year range typically is when they're expecting it. So that's why in the sort of 4 or 5 year horizon from now, we have about a 50-60% risk that Bitcoin's encryption is completely broken. That's, of course, if we don't upgrade. So there is action being taken to upgrade it, and that's quite positive. And I'm optimistic that will happen before the risk is very great. So yeah, we just need to really see some tangible action on that in 2026.
We'll get to that. Just quickly, in terms of, it's the last year, is there something that happened in terms of a breakthrough in quantum specifically that led to the concern to become that present? Or is it just like a culmination of events?
It's basically just the trend. Quantum is basically developing like all transistor chips. So for 100 years, we've had Moore's law, where processing power of chips has doubled every 2 years. And you can plot that over 100 years, and it's basically a straight line on that kind of exponential chart. So quantum's the same, except it's actually developing faster. It's doubling every year and a half, and it's really consistent. So the error rates are dropping very consistently every year. The number of qubit counts is going up consistently. People will say, quantum machine today can't do this or that, or it's so far away, or the error rates are too high. Yeah, fine, but look at the trend and the compression of error rates, and it's mind-blowing, and it's not slowing down at all. And they're actually finding that the more qubits you add to these arrays, the more the error compresses. So it's not the way you might think logically that it would be the other way around. So it's basically those trends, and all of these, tier one companies have done forecasts, and they've beaten, typically in the last 2-3 years, they've beaten their own projections historically for where they'd be in terms of qubit and error rates. And they're basically, between 2029 is probably the earliest one that's forecasting multi-thousand qubit capability up to 2030, 2031. So that's why this risk is really kind of emerging. And so, like I said, the probability in 2 to 3 years is quite low, but it is non-zero, and it just grows very exponentially from there. So, and with Bitcoin, obviously being built on trust, it's not something that you want to just leave and address later, because you could, and we'll just go through a huge bear market. But if we want to maintain maximum trust and commitment and long-term capital allocations into this asset class, we should be getting on this now. And basically the process is, propose the code, which is being done through several BIPs, and get the Bitcoin core dev team aligned on that, then basically onto the nodes, because basically nodes and exchanges decide, and then the miners typically follow the capital from that front. So I hope that we'll see more advancement on the code. There's been quite a bit of work done, so I don't want to discount that. But we have some big question marks that need to be managed that haven't been solved yet, like signature method and block size. That's a whole other topic.
I mean, you've obviously been quite vocal about this on Twitter and faced some blowback from some of the hardcore Bitcoin maxis and some of the Bitcoin devs. I'm curious then, why do you think, in putting yourself in their shoes, they are so blasé about this risk, or indeed, why do people think it's not that big of a concern?
Yeah, I'd say right now it's cut probably 50-50. So 50% agree with it and are working on it. There are Bitcoin core devs working on it. There's BIP 360 and other bits of work that's been done and is quite advanced in some regards. And there's the other half which completely dismiss it. And they kind of fall for me into the category of where Jensen Huang was, so the CEO of NVIDIA, just a year ago. So basically exactly a year ago, Jensen Huang said, quantum computing is 15 to 30 years away. Basically forget it. The whole market collapsed 60%. He went on a massive backflip transition over the next 12 months. So 2 months later, he said he was wrong about that timeline. Then in June last year, he said we're at a quantum inflection point. Then in September, he started buying quantum companies. They poured billions into quantum companies. And then in October, he said they're going to integrate quantum chips into all of their supercomputers very soon. So quantum is going to like supercharge AI in the future and solve problems and unlock innovations we just can't imagine. So it's a really exciting field. It's not to be afraid of. It's actually really promising. It's basically that journey is pretty classic for people who have no knowledge of the industry, haven't followed it, don't know the trends, haven't looked at the data and the exponential growth rates. They'll dismiss it because if you look at the tech today, it looks like AI looked, like ChatGPT looked in 2020, 2021, like pretty average. But if you actually study it, then you'll go on the same journey as Jensen Huang, the CEO of NVIDIA, and realize it's actually super close. And if you investigate what all the companies are doing globally in the US and abroad and what they're capable of now and the milestones that have been hit every quarter, like clockwork, it's pretty obvious it's coming at us like a freight train. The other factor is why it's been dismissed by the Bitcoin community, I believe, is basically incentives. So what is the incentive of all these people? A lot of the hardcore Bitcoin maxis wanted to see, myself included, wanted to see Bitcoin at 150, 180 last year. And so if you start talking about quantum threat and risk to Bitcoin breaking and that sort of thing, when we're at 120, that's obviously going to derail that opportunity or potentially hurt future price action. For me, I think talking about it is more important early, because if the earlier we solve this, the less pain we're going to go through later. So I want to see the most success for Bitcoin in the future. I want to see it go to multi-trillions and match gold and exceed it one day. For that to happen, we need to be on the front foot of this. And that's why I decided we can't wait any longer, because we've hit that event horizon timeframe. And I'm just going to go really public on it, because I was kind of popping my head up here and there over the years, but I just kind of went full public on it and full steam ahead in mid 2025. So yeah, it's just something we've got to get on the front foot of. And the big names that are dismissing it, if you look at what they do, they basically run pure Bitcoin companies. So incentives are completely aligned against it. And they, in often cases, are discussing it, trying to solve it in private, but they completely dismiss it in public. People will know who I mean when I say that, but there's a lot of names that fit that criteria. And it's not very helpful for progressing the resolution of this.
Sure, they can speculate. So you think that they'll eventually, come around, or they'll eventually come public and coalesce around a bunch of solutions which you think will ward off this potential threat?
Exactly, yeah. And they, in many cases, already have. Like, there's been a significant turn, I would say, in the last 2 months, and I hope that accelerates over the next 6 months. Yeah.
Great. So moving on to then another threat to Bitcoin that you elucidated as well and talked about in Singapore last year, in conjunction with quantum, was the DAT risk. And we've already since Token 2049 last year in Singapore, seen a bit of a capitulation from some DATs. Not strategy though. I mean, Saylor has still been buying. I think this week or the last week, he bought like $2 billion worth of Bitcoin. So he's still stacking sats, but it's not really having too much of an impact on the price right now. But I'm curious then in terms of how are you reading the debt landscape? Do you think that there is still risk of further capitulation? This then pertains to strategy. I mean, obviously now he's got this cash reserve for dividends that to pay for the preferreds, but I think that there's more scrutiny now around that as well. So how are you reading the landscape right now in terms of debts?
Yeah, so let me pull up some visuals to talk to this. So I spoke about the DATs, I think it was the October 3rd or 4th, a couple of days before the all-time high. And that was also when I talked about the quantum threat in Singapore. I was worried for a few reasons. We had 190 DATs, we've now got 199, but you can see the growth rate has massively dropped because they're just not performing. There's a few issues here. If you just simplify it, dumb it right down, what is a DAT? It's basically an ETF. It's a company that buys Bitcoin, puts it on a balance sheet, and tries to attract new capital to invest because they want to give those investors a Bitcoin yield, right? So this Bitcoin yield is a very interesting philosophical thing and pretty questionable because it depends on a premium to NAV. So that means the value of the company has to be worth more than the Bitcoin. And when they have that, they can issue new shares without being dilutive. When the value of the company falls below Bitcoin, they can't do that because it's dilutive to their shareholders. So that creates a problem when MNAV is less than 1, which it is for many of these companies now. And that means their only tool set is either to give up or to get acquired, which started to happen a little bit in the last couple of months, or to use more and more debt. Because if you use debt, then you can obviously buy more Bitcoin, pump up your Bitcoin yield and tell your investors, look, we generate 10% yield or 20% yield per annum on Bitcoin. That incentive structure is also really concerning because if these entities are incentivized to use debt, then you can imagine the debt multiples will go up through the roof over time. And that could create a leverage cascade risk like we've seen in 2022. But very simplistically, a DAT is basically an ETF, ideally with some form of yield, but that yield relies on weird incentive structures that are not sustainable through time, especially because Bitcoin's a fixed supply. You can't grow your Bitcoin forever. So that just doesn't work. So it's basically an ETF. And do you need 200 ETFs? Do we have 200 gold ETFs? Do we have 200 NVIDIA or Mag 7 ETFs? No, like the world just doesn't need it. This doesn't make sense. So I can see a world where you have a number of DATs. I don't know what the number is. It could be 1, it could be 10, what have you, where these businesses have developed some really unique capability to leverage financial markets, to get attractive low-cost debt, to lend out their Bitcoin at some point, to acquire other DATs and consolidate them. So it might be MicroStrategy long term, could be others. I don't want to name names, but there is a model probably somewhere for basically, it's like a long-term Bitcoin bank, right? I think these DATs succeed will convert into effectively Bitcoin banks that lend and borrow and generate yield through that more sustainable fashion long term. But 200 DATs, I don't see a world where that makes sense at all. And I think that will compress significantly in the coming years.
So you think there is a place for DATs in the current landscape right now? You think as long as they have methods to actually generate additional cash flow and generate yield from their Bitcoin, you think there still is a need for them or a desire for them?
I mean, let's have a look. The yields have collapsed a lot. They're still decent, but they've come right back. And because Bitcoin's a fixed supply, I just don't think that's sustainable. So when I say DAT, I basically see DATs evolving over time into, like I said, a bank, a Bitcoin bank, if you will, different business lines to generate the yield. Buying, MicroStrategy, I think they said they're not going to acquire other DATs, but I guarantee when the DATs are deeply, deeply undervalued, of course they will buy them. Like if you can buy a company that is worth $10 million in equity, it has no debt or no other factors to consider, and it's got 30 million of Bitcoin. Of course, you're going to buy the Bitcoin for a 66% discount. Like it's a no-brainer. So, and they can generate massive yield on that. So I think that is probably a wave that will come. But until then, as the DATs continue to kick on, we can see the MNAV less than 1, the percentage of companies with it, MNAV less than 1 has risen to about 30%. This will drop again if Bitcoin goes through the roof and mania and that sort of thing kicks in. But long term, I expect this will continue to drive up. So 30% of these companies can't issue equity anymore. They're struggling to survive, basically. And the other big risk factor to monitor here is the debt ratios. So you can cut it many ways: debt to enterprise value, debt to equity, debt to Bitcoin holdings. But they've all been going basically straight up since September, October when I spoke about this. They're still, not that concerning. I would say at, call it 20 to 30% range for these debt multiples. But as I said, the more DATs there are, we're about to hit over 200. If you're DAT number 300 and you're trying to compete, you can't really issue equity, or you can issue some and you've already, utilized that completely. How are you going to stand out against the other 300? You have to use debt. You're going to say, how much debt can I get and be sustainable to pump up my yield? So I just expect that this debt ratio will keep going up. And at some point, either of two things could happen. This could end very healthily and stable. Like right now, it's still somewhat healthy, right? Those metrics I talked about. But I think at some point, either the unsuccessful companies will slowly get acquired, which is starting to happen, and the growth rate in DATs is dropping. And that could make things just plateau and kind of go in really good fashion. Or if we get like a really big, if Bitcoin hits all-time highs this year, maybe we break 150 or something at some point, then you could see a lot of mania enter. You could see a lot of debt go up. You could see 300, 400 DATs. In the 1920s, we saw the investment trusts. So the 1920s was 10 years where investment trusts, basically there were companies that just bought equities and they used debt and leverage to do it. They grew up to over 600 of them and they all collapsed. So human nature and greed is basically the biggest risk factor here, but it could end in a healthy way. But human nature typically takes things to excesses.
Interesting. So your bigger concern is that right now it seems that things are petering out and the DATs are kind of like the DAT mania slowed down, and the ones that are there are trying to maybe potentially they may consolidate. But your bigger concern is Bitcoin goes back above near all-time highs, and then they just start blossoming again, proliferating, and then we get this oversupply of them, and that could then, once you've got too many of these, and you have mass mania, and that could eventually lead to a massive capitulation and crash when Bitcoin, drops again into a bear market low or something.
That's it. So like while debt levels are relatively low, like today, while MNAVs are okay, like today, not great, but okay, then DATs are actually great for Bitcoin because they're taking supply off the market in theory. They will help to drive prices up. And remember, we're only 4 or 5 years into this. So Saylor basically kicked it off 2020, late 2020. And if you look at what happened in the 1920s, this went on for almost 10 years. And they just kept grinding up till they had 600 of them. And then they all collapsed, and they basically were one of the driving factors of the entire 1930s collapse, which is the biggest financial collapse probably ever, especially in recent history. So this is a significant risk factor for Bitcoin. It doesn't have to end that way. It could end somewhat positively as the market evolves. But, as I said, human nature is definitely the risk factor here. And the incentive structure of being these companies are incentivized to use debt. If they want to keep doing what they're doing, they will have to use debt to compete at some point. So that's something to watch. I'm basically, right now, it's kicking along, could go for years, but we just need to really track these metrics, like the ones I showed in Capriole charts here, pretty closely and see how it evolves.
Yeah, definitely want to watch. So going back to where we are right now and the potential cycle, obviously there's these risks now, which we've talked about, that are weighing on the market and weighing on investment incentives. But I'm curious then in terms of, because in earlier Jan, I think you tweeted, proudly proclaimed the 4-year cycle is dead. And I think many people are coalescing around this idea because obviously, the whole 4-year cycle predicated on the halving, and that has kind of been disproven the way Bitcoin performed last year, and indeed made an all-time high prior to the halving in 2024. So does that mean, in terms of where you think in terms of cycle top, because we hit 126 as an all-time high, in October, do you think that means we could still hit all-time highs this year again and go above that?
Yeah, great question. So I do think the cycle is dead from the traditional point of view. So those who don't know, Bitcoin is a 4-year halving cycle where supply growth rate cuts in half, inflation drops from Bitcoin miners. And that historically has driven a cycle and price appreciation because miners have a massive impact on the network historically. That is not a factor today because Bitcoin's inflation rate is only sub 1%, less than half gold. So it's already the hardest asset out there. And the mining entity share of the network is negligible compared to the ETFs, the DATs, etc. now. So there's no cycle driving factor from that at all anymore, in my opinion. The only thing that is a cycle in that regard is that we have a lot of people who've been in Bitcoin for 5, 10 plus years. They've built up huge amounts of money and they believe in cycles. And there was a lot of de-risking and selling last year. So you could argue that it's self-fulfilling if enough people believe in it. So that is some risk factor. That's probably a component of performance issues recently. But I don't think it's a factor anymore. I think the people that believed it will have already positioned accordingly, or definitely will have in this Q1, Q2. And right now we're trading at relative value opportunity across a lot of metrics for Bitcoin. So that's super promising. We talked about energy value, but there's also many other metrics we could look at that are trading a deep discount. We've had hash ribbons fire off recently. We had dynamic range NVT, which is basically the value of Bitcoin to its transaction throughput. That is trading at a massive discount right now. So I'll just quickly pull that one up. But yeah, every time that's in a green zone, you typically long-term have a really good opportunity. So this is pretty consistent across a lot of on-chain metrics that show we have some opportunities ahead. If you zoom out, Yardstick's another one I like, market cap to energy value. So also in the green zone. So value looks decent. Value can also continue to go down. So that's something to monitor. Like you can be in a deep value zone for a long time, like we were in 22 and things got worse. So you can't just rely on one metric. You have to aggregate them. And you also need to see other things turn around, like flows, which we've just started to see, the institutions becoming net buyers. Basically, I don't think the cycle matters. The biggest driving factors are actually macro and liquidity. So this is actually the more probably exciting, promising stuff to talk about for Bitcoin, I think. And that's global money supply, which touched on, is up in 2025. Where are we? Here, it's up from 105 trillion to 115. So we added 104 to 115. So we added 11 trillion to the market. You can then cut that as a year-on-year growth rate, and you can plot that like this, and it's over 10% a year. So this is the S&P, but if you look at Bitcoin, you will see that all of Bitcoin's massive price appreciation was when we had large inflation like today. So 10%, last time being mid 2020 also, but just before the big bull market. And we also had a pretty choppy period here as well. So we could be going through that now, building out a base and see acceleration, especially with the value opportunities. But we will definitely need to see some things change, like the selling behavior of long-term holders. It has actually plateaued in the last couple of months. So you can see these lines are basically cut across different time horizons, but they're basically the period of time exceeding which that people haven't moved their coins. So this bottom one is all the percentage of the network. So back in 2 years ago, it was about 50% of the network had not moved their Bitcoin for 2 years. That's massive. But then they started selling. And so that number came down to what it is today, so 47%. But you can see it's plateaued across all different time horizons. So this is actually positive. It's actually ticking up here on the 6-month horizon and the 1 year. So this is actually really quite exciting to see. We haven't seen that in at least 6 months. So as long as this trend can continue, the 6 year goes up, the 1 year, and then the 2 years will follow. That means more people acquiring Bitcoin, the sell pressure is less. So that's definitely a really positive sign for January. Something that I would like to see change though is this OG selling or transaction behavior. And this is the people have been in Bitcoin for a really long time, 7 years. So we touched on this earlier, but they've been selling in 2025 a lot more than any price cycle. It has come back a bit. I'd like to see it come back further. But we already have some promising signs we talked about with those other long-term holders. So packaging all that together, lots of different data points. The leading driver is liquidity. It's growing massively. So that's the net liquidity, the global money supply we talked about. US liquidity, which also cuts things at a government level and a Fed level. So this is looking at the Fed balance sheet, less reserve repos and Treasury general account. It trended down into the US shutdown. And then as soon as that ended, it's just gone straight back up quite a lot. So that's really quite promising. So we're seeing in the data a lot of the right signs. We're seeing liquidity growing at an incredible rate, which has always seen Bitcoin do well. We're seeing undervaluation in Bitcoin. That's great. We're seeing long-term holders slow down their selling, which is really great. So we could actually be at a pretty exciting pivot point right now. I think for that to continue over the next 12 months, we'd want to see, at least by mid-year, some more progression on a pathway to quantum proofing Bitcoin. It doesn't have to be completely solved, but we should have broad alignment on code and a plan among key players or institutions at least talking about it. I think once we have that, even if it's not implemented, confidence in the network will just go through the roof because you can start pricing in the solution, which will cut down the discount factor for risk significantly. So that's great. And as long as those liquidity factors continue, great. If you look at leading indicators, like what is Trump, the Fed, and the government going to do the next year? Well, Trump's got his midterm elections between March and September. So the next sort of 3 to 9 months, he has to get voter support. And voters basically only care about, the most significant factor that voters care about is economic outcomes and low inflation. So the incentives are all there to drive liquidity. He's said he wants lower rates very clearly. He's going to put in a new Fed chair who wants lower rates as well. They're trying to lower mortgage interest rates through various policy actions. They're trying to cap credit interest rates for credit cards. So a number of policies are hitting the ground, which are only going to add fuel to the fire for liquidity. And that means, how do you deploy this money if you can get it cheaply and you got lots of it and you want to put it into risk on assets like really Bitcoin, gold, and equities? And so we have all the right ingredients for this to be an amazing year. For it to really shoot the lights out, I think we need to see significant progress in quantum. If we don't, we might just, have a gentle all-time high or go to 130 or 140 potentially to the upside. If we solve on quantum this year, like we can go up many multiples. Like gold added 11 trillion last year. Obviously, I don't think Bitcoin will do that in 1 year, but we could definitely see massive expansion. I expect that once the quantum risk is solved, we will see huge expansion upwards for Bitcoin to kind of compensate where it's been lagging.
It's a very optimistic view. I mean, it's great to hear this, given the markets right now. On a value perspective, demand, long-term holders slowing down the supply distribution, liquidity. I mean, that's indeed what many people are pointing to, which is good. And it's good to hear that reinforced from analysts such as yourself. But I think what many people are wondering right now, and I think part of the reason that sentiment is so low in crypto and in Bitcoin circles is because it has been outperformed by gold. And gold is definitely, in terms of many of the factors that are driving gold right now, they are these massive geopolitical shifts, mass central bank buying, and this debasement and de-dollarization. And, it's not necessarily the same factors that could impact on a risk on trade. It's the classic risk off right now. So, and you've also said on your tweets that you think that, for example, gold, one of your recent ones, that gold can continue outperforming equities for a decade, and we're only 1.5 years into that. And you've said that if you think about expansion of money supply, gold could go up to above 10,000 in the next year or so. So I'm curious then, Bitcoin versus gold, do you think that Bitcoin will catch up? Do you think that Bitcoin could outperform gold this year? So of course, there's questions around quantum that you mentioned there, but hypothetically, like if quantum isn't solved this year, do you think that gold will continue outperforming Bitcoin?
That's a tough one. I don't know if I can answer that one. I'm really bullish on gold.
Just to clarify, you hold Bitcoin and gold personally, right?
Yes, yeah. Well, we hold based on our strategies today, and that changes day to day. So this data can be completely different in a month, right? And that will change. But today we have a pretty big position in gold and have for a few months. Yeah, maybe let's if we quickly talk about gold. Yeah, it's pretty exciting time for gold. The gold bugs get a lot of crap. And I think they're finally getting their revenge. So probably one of the tweets you might be referencing is this one. So this metric is also in our charts, but basically this bottom indicator here is a very simple ratio of gold to equities, or the S&P 500, over the last 100 years. And when it shoots up and goes red here, it's basically breaking out against 200-week moving average. So it's showing relative outperformance. And this is a metric I've used for almost 10 years. But when gold gets these periods of outperformance, and that doesn't happen a lot, but when it does, it can go for a long time. So these kind of orange bands are where it's happened in the past, and yellow bands. And they're all usually sort of 3 or 4 years, and they kind of cluster a period of up to 10 years. And we saw in recent 2000s, it went over 10 years. And during these periods, like in hindsight, you basically would have been better off selling all your equities and just holding gold, because gold went up every single time and by a lot, by 150% on average in each of these periods. In the 2000s, more recently, it went up 360% in that 10-year period. So, this trend doesn't have to stick, right? Like we might talk in 6 months and maybe it completely falls apart as it's had short periods before. So it doesn't have to, but statistically, historically, gold, when it has a big rally, it tends to stick. And it's an old saying in investing, don't fight the trend. The trend is your friend, right? So as long as this data shows that gold is outperforming, you basically want to hold it. It can have a lot of volatility, right? Like we might be about to have a big drawdown on that, like we've seen in the past. But if you zoom out and are holding this for looking at allocating over years, this is probably something you want to have some exposure to, in my opinion. And remember, the multiple to equities today is only 0.66. So that's the ratio of gold to equities. So in the past, look how high it's gone. It's gone here up to 3. In 2000, it went to 1.5, went up to over 4 in the 70s. And the 1930s, it went over 3.5. So that means it can go up more than 5x from here relative to equities, which is kind of mind-blowing when you think that gold's at almost $5,000 today, and it could go up 5x relative to equities. So that could mean over that period, maybe equities go down, maybe they go up. But yeah, that's pretty incredible. If you plot that same chart to equities, you see that equities have a lot of trouble in those periods. I think I have it here somewhere. Yeah, here. Similar crossovers plotted here. All of the massive drawdowns of equities happen when gold is outperforming, like today. So 1930s, minus 76% from a similar point in time when we crossed similar level. We also have the massive 2008 crash, minus 50%. In the 70s, a minus 46% drop as well. So the maximum drawdown here is actually really a risk factor for equities. And again, that doesn't have to be this year or next year or the year after. It could be in 5 years, right? So this is not necessarily for timing, but it does show you that you want to have exposure to gold, and you may want to, if you have massive positions in equities, you may want to rebalance that slightly if your time horizon is very long term. And then when that crossover ends, so for example, if gold was to underperform over the next year and then equities outperform and this crossover goes back to green, that would be when the sort of gold regime ends. So what this red percentage numbers and the green ones show is when that regime ends, how did equities perform? And you can see that most of them are red with 30, 20% drawdowns. And then the ones that are green, there's one which was pretty good in the 70s, but otherwise basically flat. So you could be in a regime where over 3-5 years, equities basically do nothing or are very volatile at least. So that's definitely a very interesting, in my point of view, data point to monitor for considering allocations. It's super bullish for gold, obviously. And if gold does well, then there's no reason Bitcoin shouldn't do even better over the same time horizon, provided, again, it solves on the quantum threat, which is basically its only disadvantage to gold today.
It's interesting, though, because so Bitcoin has been trading as a risk on asset over the past year, right? Indeed, even the past 2 days, it's been crashing with equities. And so then this led many people to question the whole digital gold narrative or the risk off of Bitcoin. So you think that Bitcoin could eventually begin trading like gold again? Because if you were to read your charts there, and if you were to think that Bitcoin's recent correlation with equities is to continue as a risk on asset, then it would indicate that probably you should be, overweight gold and underweight Bitcoin going into this regime. Or what do you think?
Look, that today, with the data I have today, that is my viewpoint until this significant traction on upgrading Bitcoin. It doesn't need to be a full rollout, but it needs to be a robust pathway towards that to significantly reduce the risk. Because for me, like right now, the risk that Bitcoin goes to zero is 20% until that roadmap is implemented for quantum. So if we chat in 6 months and the code is looking pretty rock solid and there's broad alignment from core devs on that, then that risk probably drops to 5% or zero, right? So then you get significant repricing. But I need to see some traction on that. So gold doesn't have that risk. So that's something for me that needs to be considered. We manage that in our fund. We obviously trade Bitcoin and crypto long short, so we can take both sides of the trade, which is good. We can position in, we're a macro systematic fund, so we position in gold, we position in some equities as well. And gold and equities have significantly for us outperformed Bitcoin in the last 2 years by many multiples. So it just makes sense to have a bit more of an even split for me. Obviously, everyone's profile is different, but for me, we're trying to capture strong absolute returns over the next 2, 3, 5 years, risk manage that on the way through, and position based on the data we see. And that's where I'm at today. But I'm very fluid and dynamic with this, and strong opinions loosely held, and will adjust when the data changes. But yeah, if I can see this being a really positive year for Bitcoin, because there's all the opportunity in the world to resolve some of the problems it has. It's deeply undervalued. Investor flows are changing significantly, as we talked about. Both gold and Bitcoin could go up a lot this year, and maybe Bitcoin goes up more. It remains to be seen. I'm very confident that when we have some traction on upgrading Bitcoin and some solid code, that Bitcoin will massively outperform gold. The question is when we get there. That's the challenge of a decentralized network. It moves a bit slow, of course. So at some point, I see massive outperformance and deep value, incredible opportunities for Bitcoin. If nothing is done for Bitcoin, I think we'll just go through a huge bear market, and there'll be a lot of trust wiped out, and it'll take many years to recover from that. So that's why I want to see some change first, so we don't have to go through that in whatever it is, 4 or 5 years' time. But yeah, I'm positive as of now for this year.
That's great to hear, man. It's good to have some positive perspectives going into this year, given what we've been through the last year. So, Charles, just to finish off with a quick few questions, maybe on the fun side here, rapid fire questions. So, one indicator you trust more than you probably should?
Right now, the institutional buying for Bitcoin, that is, the net flows. If we're talking about all assets, it would be global money supply.
This is your own proprietary indicator that on Capriole?
The institutional buying is, yes, we created that. Global money supply is kind of a known global metric for all money, but yeah, we have it on the platform.
And what comes first, discovery of alien life or Q-Day?
Q-Day,
they said that the Bank of England said, I don't know if you saw the news, but there's one financial risk that the markets aren't accounting for right now is the US announcing the discovery of alien life.
Yeah, it's for me in the same category of mining gold and asteroids.
Yeah, that's true.
Like maybe one day, but not tangible right now.
But Q-Day first then.
Yeah, Q-Day in 3 to 6 years. Yeah.
And then final one, this is the tough one. Forced to hold one of these assets until the end of the year, and only one. You've got either Bitcoin, gold, silver, or Nvidia.
That's a tough one. Like they're all pretty good assets in different respects. And no doubt what I choose won't necessarily be the best performer in hindsight, because they'll probably all do well in different respects. But I would definitely choose gold if I had to put if we're talking about all my money in one asset, just simply because lowest risk profile, this massive gold regime it's in. That said, there's plenty of reasons Bitcoin could shoot the lights out, but it just has some more risks that need to be addressed first. So I'd definitely choose gold simply from a risk perspective on this one. So it's not just about returns necessarily for me, but also if I'm all in on something, I'd want to consider the risks.
There you go. Peter Schiff will like that answer.
Yeah, he would probably like that. Yeah.
Bitcoin maxis have converted. The Bitcoin maxis are moving towards gold bugs. But thanks a lot, Charles. I really enjoyed this conversation. I mean, it's optimistic about the future of Bitcoin. I think that we just, we need to be concerned about these risks, but at least we're going to at least get other people on board. And actually, there is the movements towards actually solving the issue around quantum. And I'm glad to see that you basically holding the light to that. And I think that people must give up the bag bias in terms of Bitcoin right now and think about the longer term picture, because if it is a big problem right now, it's one that many other people are thinking about. Yeah,
thank you. And I've really enjoyed it. Don't get me wrong. I think like of all those 4 assets, if you had like a 10-year horizon, like probably Bitcoin will just destroy them all. Because I'm confident that we'll solve all these problems through that period. So it's just about perspective for me, and trying to get in the front foot of solving these risks. And I think there's a super promising future for Bitcoin, and I'm definitely bullish on the long term.
Bullish, guys. Well, thanks, Charles. Again, I will leave a link to Capriole Investments down in the description, as well as your Twitter. Is there anywhere else where people can follow you?
Yeah, Twitter, Capriole IO is the handle. You can go check out our website, capriole.com. We have a market update newsletter once a month. And if you like charts and data, you can check out those charts we went through. But yeah, it's been great to be here, and I love chatting about all the different elements of the market, Nick. So
all right, mate. It'll be great to have you on again soon, man. Cool. Cheers, guys.